Stock futures are right now up across the board. Let's see if they stay a beautiful thing today. But what is concerning investors a lot right at the moment, the U.S. dollar falling to its weakest level against the euro in 3 years.
Well, we're just getting some breaking news here, actually. The Finance Ministry has just made an announcement that remember there were 34% tariffs on all US goods coming into China. That's now been increased to 84%.
They're not just backing away. They're charging out the door. China's slashed over $100 billion in U.S. Treasury bonds in just 6 months. And now Japan, America's staunchest ally, is racing to do the same. Why are the world's biggest debt holders dumping U.S. bonds at breakneck speed? China's been a titan in U.S. debt, once clutching $1.3 trillion in Treasury bonds. Fast forward to early 2025, that's nosedived to $759 billion, a 14-year low. What's sparking this fire sale? It's not just economics, it's a counterpunch. Donald Trump's tariffs, slapping Chinese goods with duties as high as 145%, have turned trade into a battlefield. China's not sitting idle. They've hit back with 125% tariffs on U.S. exports and are now unloading U.S. bonds at a furious pace. This isn't a random sell-off, it's a calculated jab. In April 2024, China's central bank doubled down, scooping up gold while dumping treasuries. Gold shining brighter than the dollar in Beijing's eyes. This is a deliberate signal. China's done playing by Washington's rules. Analysts are buzzing. Some say China's wielding its $759 billion in bonds as a financial weapon, aiming to rattle U.S. markets as Trump tightens the tariff screws. Is this the opening salvo in a full-blown economic war? Trump's tariffs are meant to revive American factories, but they're pushing China to rewrite the global financial playbook. Beijing's on a mission to make the yuan a global star, cutting ties with the dollar. In 2025, reports flagged China accelerating its bond sales, sending shockwaves through Wall Street. This de-dollarization drive is a direct response to tariffs that make trading with the U.S. a losing game. It's a gamble with global stakes. If China floods the market with bonds, U.S. interest rates could surge, hammering everything from home loans to stock prices. But here's the catch. China's own reserves could take a hit if they push too hard. The trade war's turning financial markets into a high-wire act. What's China's endgame? A world where the dollar's no longer king, and they're betting big to make it happen. China's not the only one bailing. Japan, holding over $1 trillion in U.S. bonds, offloaded $30 billion in just 2 months last year. Why's America's top ally hitting the exit? It's not a direct tariff feud, but Trump's trade policies are stirring the pot. His 24% tariffs on Japanese imports, from cars to electronics, have rattled global markets. The yen's in freefall, scraping 30-year lows. To save it, Japan's central bank is selling U.S. bonds to buy back its currency. This isn't a snub, it's a desperate bid to stay afloat. But it's slashing demand for U.S. debt. In April 2025, the 10-year Treasury yield spiked to 4.6%, a decade high, partly due to Japan's sell-off. Trump's tariffs are creating chaos, and even allies are caught in the crossfire. Who's next to ditch U.S. bonds? South Korea, with its own currency wobbles? The EU, facing its own tariff threats? Every sale chips away at the dollar's armor. Japan's moves show how Trump's trade war is sparking unintended consequences. Global investors are jittery, and the fallout's hitting everyone. Higher yields mean pricier loans for businesses, tighter budgets for families, and a tougher road for the U.S. economy. The tariff storm's reshaping the financial landscape, and no one's immune. U.S. treasuries are the pillars of global finance. When China and Japan dump them, it's an earthquake, and Trump's tariffs are the tremor's source. The 10-year Treasury yield leaped from 3.9 to 4.6% in a week, the steepest climb in decades. Investors are fleeing bonds, spooked by fears that tariffs could tank the U.S. economy. Higher yields spell trouble for a government drowning in $34 trillion of debt. With a $1.7 trillion deficit, America's banking on foreign buyers. But Trump's trade war is driving them away. China's bond sales could flood the market, devaluing the dollar. In April 2025, the dollar dropped 3.2% against a basket of currencies, a 3-year low. Tariffs are painting U.S. assets as a risky bet. Instead of snapping up treasuries, investors are piling into German bonds, Swiss francs, and gold, which soared to $3,200 an ounce. The trade wars eroding the dollar's safe haven status. This hits close to home. Higher rates mean your mortgage, car loan, even credit card bills are climbing. Businesses are stalling. Some are already laying off workers. In 2024, 3 regional U.S. banks teetered as rates surged. If this spirals, we could face a financial meltdown. Trump's tariffs are jacking up costs, and the bond sell-offs pouring fuel on the fire. The dollar's not just money, it's America's global muscle. If the world loses faith, the U.S. loses clout. This isn't a distant threat, it's happening now. This isn't just about bonds, it's about who runs the show. Trump's tariffs are accelerating a global pivot away from the dollar. China's not just selling bonds, it's building a yuan-based empire. In 2024, the yuan's share of global trade payments hit 5.1%, a historic high. Saudi Arabia's trading oil with China in yuan, ditching the petrodollar. BRICS countries are crafting a gold-backed currency to rival the dollar. Central banks snapped up 1,100 tons of gold last year, the most since 1967. The world's bracing for a dollar downgrade, and Trump's trade war is the catalyst. Tariffs are making U.S. trade toxic, so countries are forging new paths. This could sting you directly. A weaker dollar means pricier imports, your phone, your clothes, your gas. Your savings could shrink if the dollar loses its throne. China's bond sales, tied to tariff retaliation, are a warning shot. If they keep dumping, yields could hit 5%, choking U.S. growth. But China's walking a tightrope. Selling too fast could tank their own markets. It's a global standoff. Trump's tariffs aim to boost American jobs, but they're shaking the world's financial foundation. Can the U.S. weather this storm? Or will the dollar's reign end? The world's betting against it, and that changes everything. What's next in this tariff-fueled chaos? If China keeps unloading bonds, U.S. interest rates could hit 5%, crushing banks and markets. Trump's 145% tariffs on China could gut trade, pushing the U.S. toward recession. Goldman Sachs now gives a 45% chance of a downturn by 2026. Inflation's already a beast. Tariffs could drive it to 4.7% per Bloomberg. Your grocery runs, your rent, your bills? They're about to hurt more. The dollar's sliding, down 10.3% against major currencies this year. If this holds, America's economic crown could slip. Trump's doubling down, claiming tariffs rake in billions, though data shows 200 million a day at most. His team says it's leverage to force better trade deals, but China's not blinking. Beijing's open to talks, but only if the U.S. eases its tariff chokehold. Japan's bond sales prove even allies are spooked by the trade war's fallout. The Federal Reserve might buy bonds to calm markets, but that's a short-term fix. The real solution? A trade ceasefire. Without it, expect wild market swings, pricier goods, and a battered dollar.